Mullen Automotive is a California-based company producing the latest generation of commercial trucks. They entered the market through 2 acquisitions in 2022. Bollinger Motors for $148.6 million, providing entry into medium-duty truck classes 4 to 6 and potential entry to SUV and pickup truck EV segments, and Electric Last Mile Solutions, ELMS, for $105 million, offering a manufacturing plant and intellectual property needed for engineering Class 1 and Class 3 electric vehicles. These acquisitions gave Mullen a diverse portfolio in the commercial EV truck market with little competition. They have also established the Romeo battery asset purchase for in-house module and pack production. Currently, Mullen is focusing on the commercial EV segment rather than their planned consumer electric crossover, the 5. They have 2 manufacturing plants in Tunica, Mississippi, and Mishawaka, Indiana, which allows them to bypass upfront costs and capital expenditures typically associated with new EV companies. Mullen's strategy involves leveraging existing OEM engineering and tooling while prioritizing speed to market and low capital cost entry for Class 1 and 3 commercial markets, resulting in lower investment requirements compared to other startups. To further reduce initial capital outlays and startup risk, they utilize contract manufacturing, such as their partnership with Roush Enterprises for Bollinger's Class 4 truck production. The business claims to be well-positioned to lead the transformation of the motor vehicle landscape, particularly in commercial trucks, with the reasoning that major OEMs investing billions in transitioning their portfolio from gas-powered to electric propulsion. Policy changes have supported early adoption and commercial fleet electrification. Electric trucks are increasingly cost-effective for urban duty cycles, with improving affordability due to increased availability and decreased costs of EV components like batteries. The fleet and commercial segments constitute a significant portion of the U.S. commercial market, including government, commercial, and lease and rental sectors. Mullen Automotive aims to establish strong customer relationships with fleet operators to capitalize on the growing trend of vehicle electrification. As large OEMs prioritize passenger vehicles over commercial truck conversions, Mullen sees an opportunity to capitalize on this market gap in the commercial EV segment. In contrast to retail customers, fleet purchases are primarily based on pragmatic business decisions that consider cost variables and company strategies. The known routes and duty cycles of fleet vehicles allow for a good match between their range requirements and the capabilities of electric vehicles, thus supporting early adoption in the commercial space. Mullen offers a Class 1 cargo van called the MULN 1, which is suitable for various applications like last-mile delivery and vocational service applications. With a wheelbase of 120 inches and dimensions of 186 inches long, 65 inches wide, and 75 inches tall, it provides 160 cubic feet of cargo space accessible through dual sliding side doors or a rear liftgate. The van has a curb weight of 3,198 pounds, can carry up to 1,683 pounds in payload capacity, and has a range of up to 110 miles with its 42 kilowatt-hour battery. It also boasts an approximately 20-foot turning radius, similar to the smaller Ford Transit van. Currently, there is no competition from legacy manufacturers in this segment for the MULN 1, as all other OEMs have withdrawn their gas-powered entry. The MULN Class 3, known as the MULN 3, designed to accommodate over 5,684 pounds of maximum payload and have a gross vehicle weight rating, GVWR, of up to 11,000 pounds. It offers approximately 120 miles of range with its 89 kilowatt-hour battery. The truck features a tilt cab chassis design that can be customized with options like dry box, flatbed, stake bed, and more. Its cab-over design provides excellent visibility for the driver while maintaining a tight turning circle of about 38 feet, making it highly maneuverable on narrow city streets. The Bollinger B4 chassis cab began serial production on September 16, 2024, with orders and deliveries currently being fulfilled nationwide. Its product differentiation lies in its proprietary purpose-built EV chassis, which features 40-inch wide frame rails that securely house all batteries and components between them. The unique quad-bend technology enables the 40-inch wide chassis to turn like a traditional 34-inch one. With a GVWR of 15,500 pounds, it can carry over 7,325 pounds. It comes equipped with dual Our Next Energy LFP battery packs and supports both Level 2 and DC fast charge systems. Its cab-forward design provides better visibility and more cargo area behind the driver. All components are accessible from below the frame for optimized serviceability. The B4 is fully certified by EPA, NHTSA, and CARB, and Bollinger plans to launch a Class 5, B5 in 2025 and a Class 6 truck in the coming years. The Mullen iGo is designed to meet the demands of quick deliveries in urban areas while navigating space constraints in dense cities. It's certified and available for sale in initial markets such as the UK, Germany, Spain, France, and Ireland. It's a small L7E class vehicle with a 96-inch wheelbase and a gross vehicle weight of 1,753 pounds, making it suitable for international urban markets. MULN uses lithium-ion technology, specifically lithium iron phosphate chemistry, for its first vehicles supplied from KTL. To increase vertical integration of critical systems, MULN purchased battery-related assets of Romeo Power in September 2023 for $3.5 million, including production lines, testing equipment, inventory, and intellectual property for producing the Legions and Hermes battery systems. This acquisition and leasing a facility in Fullerton, California, helps MULN produce an in-house battery system and reduce reliance on external suppliers. Moreover, MULN is developing semi-solid-state batteries to be used initially in their Class 3 vehicle, with plans to introduce this technology into other Class 3 vehicles after full vehicle testing and certification is completed. MULN Vehicle Manufacturing has a 124,700 square foot facility in Tunica, Mississippi that began producing Class 3 vehicles in September 2023 and Class 1 vehicles in November. MULN also owns a 675,000 square foot manufacturing facility in Mishawaka, Indiana, which was originally used for General Motors' Hummer H2 and Mercedes-Benz R-Class production. Bollinger Motors has a contract manufacturing relationship with Roush Industries in Livonia, Michigan, that began producing the B4 Class 4 EV truck and will continue with the B5 starting in 2026. This partnership avoids major capital investment by Bollinger, while still allowing them ownership of the production line for potential relocation. There are plans to form distribution partnerships with top commercial dealerships to cover national fleet business needs. They announced a partnership with Randy Marion Isuzu LLC in December 2022 and expanded their distribution to 6 dealer partnerships by 2024, providing coverage at approximately 67 dealership locations. Their dealer group includes Pritchard Group, Pape Group, Eco Auto, Ziegler Truck Group, Range Truck Group, and National Auto Fleet Group. In August 2024, they signed a 3-year purchase agreement with Volt Mobility for the exclusive distribution of MULN commercial EVs in the United Arab Emirates region. However, initial commitments from Volt Mobility have not been fulfilled. MULN also looks to win government contracts, so they focus on establishing their EV lineup within the federal fleet procurement process and state procurement offices. The Biden administration's executive order in 2021 aims to replace the entire U.S. government fleet with American-made EVs. MULN and Bollinger have applied for approval to sell their products to federal agencies and states through GSA contracts or purchasing platforms like Sourcewell. While there may be challenges due to potential changes in GSA procurement policies, MULN anticipates increased demand for electric commercial vehicles as more states adopt procurement policies requiring the transition to EVs by 2025. After-sales strategies include access to contracted dealers, service facilities, and partnerships with Merit Fleet Solutions for additional servicing options. Bollinger Motors utilizes a traditional OEM dealer network for sales, servicing, and distribution. They plan to increase dealerships to 100-plus locations in 2025 to provide sales and support to both new and existing customers. The prospective dealers are described as respected commercial truck dealers from various regions. Government sales are managed through their existing dealer network and a partnership with RRDS, granting access to procurement portals like Sourcewell via NAFG's approved contract. After-sales service will be primarily provided by the National Dealer Network, with mobile service support available for customers outside of the dealer's coverage area. Both MULN and Bollinger offer advanced telematics systems for improved fleet operating costs, safety, and productivity by providing real-time alerts on vehicle location, routing, maintenance needs, and battery state of charge. They launched a comprehensive marketing strategy in 2023 covering email campaigns, social media content, paid advertising, press releases, editorial features, sponsorships, and trade show participation. In 2024, they expanded their marketing initiatives with increased trade shows, stronger online presence, event collaborations, and direct sales outreach to new markets. They also partnered with leading dealerships for enhanced brand presence among national fleets and collaborated with upfitters to demonstrate the versatility of their products across various vocational sectors. Bollinger employs a multifaceted marketing approach to promote its products, utilizing both digital and traditional channels. Their marketing efforts include a strong online presence through their website and active accounts on various social media platforms, as well as search marketing tactics such as SEO and SEM. They also engage in customer relationship management, CRM, for communication with existing customers and prospects. Bollinger Motors participates in events like ride and drive activities at both national and local levels to provide hands-on experiences with their vehicles. Their public relations efforts involve proactive outreach to media outlets, while they support their nationwide dealer network by providing them marketing materials that align with the brand's image. Research and development is conducted at facilities in Troy, Michigan, Oak Park, Michigan, and Fullerton, California, for commercial platforms and battery business, respectively. The company incurred R&D expenses of $74.9 million and $77.4 million during the fiscal years ended September 30th, 2024 and 2023. These expenses were mainly personnel costs for engineering teams and contract professional services, which included producing several demonstrator vehicles. The company acknowledges it's at an early stage with a history of losses and expects significant expenses and ongoing losses for the foreseeable future. Since inception, they have incurred net losses, particularly from research and development activities. They anticipate continued losses until substantial vehicle deliveries occur. Even if they successfully develop, manufacture, and sell their vehicles, there's no guarantee of commercial success. Future loss rates are expected to rise due to vehicle design and production costs, increased inventory, sales and marketing efforts, distribution development, and growing operations. These expenses may exceed anticipated levels or not result in sufficient revenue, further increasing losses. Then, there's also the need to comply with extensive environmental regulation. Vehicles in the U.S. must obtain a Certificate of Conformity, COC, from the EPA and a California Executive Order, EO, from CARB for emissions compliance. COCs are needed for vehicles sold in states under the Clean Air Act, while EOs are required for those sold in states with waivers to use California standards. CARB sets emission control standards for vehicles and engines sold in California. 8 states have adopted these standards for heavy-duty vehicles. MULN, despite having zero emissions vehicles, still needs COCs and EOs for the greenhouse gas rule. MULN has received COCs for Class 1 and Class 3 vehicles and EOs for the MULN 1, 3, and Bollinger B4. Additionally, all Mullen and Bollinger Motors commercial products meet applicable federal motor vehicle safety standards set by NHTSA. Conversely, the company does recognize the potential of meeting vehicle emissions performance standards that could allow them to sell emissions credits. California has greenhouse gas emissions standards, and registering and selling zero-emission vehicles, ZEVs, in the state can earn the company ZEV credits, which can be sold to other original equipment manufacturers, OEMs. Other states have adopted similar standards, providing an opportunity for the company to take advantage of these regimes by registering and selling ZEVs. In regards to broader economic factors affecting sales, Mullen explains commercial vehicle sales are heavily reliant on affordable interest rates and availability of credit for financing. An increase in interest rates could adversely affect the company's business by making their vehicles less affordable to customers or steering them towards cheaper options. Furthermore, if financial service providers tighten lending standards or restrict certain classes of credit, it may become difficult for customers to obtain financing for purchasing the company's vehicles, potentially leading to reduced sales. A continuing high interest rate environment or tightened lending standards could thus negatively impact the company's business and financial performance. Other concerns surrounding the business involve non-cash impairment charges that negatively impacted fiscal year 2024 operating results for the company and potentially require further future impairment charges, which could harm their performance. The accounting standards they follow involve assessing goodwill and other assets for impairment annually or more frequently as needed. If an impairment is found, it will be recorded as a non-cash expense, contributing to significant financial results. Impairment losses were $119.2 million in the 12 months ended September 30th, 2024, and $84.6 million in the same period of 2023. It's also important to remember the company has limited operating history in the automobile industry, having only started producing and selling vehicles by December 2023. They also have limited experience in high-volume manufacturing of electric commercial vehicles. As a result, forecasting future results is challenging, and there's uncertainty around potential trends that may impact their business. The company acknowledges significant risks and challenges they face as a new entrant into the EV industry, including producing quality vehicles, building a reputable brand, expanding customer base, successful marketing, pricing services correctly, maintaining operational efficiency, adapting to technological developments and regulatory changes. There's no guarantee that fleet managers will adopt their products, and market conditions could impact demand for their electric commercial vehicles. Other risk comes in the form of relying on Chinese suppliers for essential vehicle components, which has raised concerns over potential issues with these vendors, such as an inability to deliver components according to schedule or subpar quality. While long-term contracts are in place with some key suppliers, not all have such agreements. If principal vendors end their partnership or fail to provide necessary components, production delays and potential loss of crucial technology and parts may occur. Overall, there's reliance on a small number of OEMs, suppliers, service providers, and dealers for the parts, components, and manufacture of their vehicles. There are risks associated with third-party collaborations, including delays, disputes, quality control issues, and potential negative publicity. The company may also enter into strategic alliances, which could introduce additional risks such as shared proprietary information and increased expenses. Furthermore, if suppliers of components or materials face economic distress, bankruptcy, or business disruptions, the company may need to provide financial support or find alternative measures to ensure a steady supply. This could potentially lead to increased costs, disruptions in production, and negative impacts on liquidity and financial performance. Mullen has noted potential issues in estimating supply and demand for their vehicles, leading to inefficiencies that could negatively impact revenue generation and budgeting. Accurately predicting manufacturing requirements is crucial to avoid additional costs or delays. However, there's limited insight into future trends affecting the business. Providing forecasts to suppliers months in advance adds complexity since historical data isn't available. Overestimating needs can lead to increased costs from excess inventory, while underestimating could cause production interruptions and revenue loss. Variation in lead times for materials further complicates accurate planning and timely deliveries. Similarly, just like virtually all EV companies, they have limited experience in servicing and repairing vehicles, particularly EVs, which require specialized skills such as high-voltage training and specific techniques, which is to be expected given this new and emerging industry. There's uncertainty about whether their current service arrangements will meet customer satisfaction, or if they'll have enough resources, experience, and inventory to handle increased demand. Additionally, state laws restricting direct vehicle servicing could limit the establishment of a widespread service network, potentially impacting customer satisfaction and negatively affecting the company's reputation and business. So while there's immense opportunity for their EV lineup, these broad concerns affecting the EV industry will have to be managed alongside specific supply and sales challenges unique to producing and selling fleet vehicles. For more on Mullen Automotive and other companies, follow Ascencore. Thanks for watching and have a nice day.